Hello, I'm Janice from the Business Development team at UOB Asset Management. Welcome to the United Global Healthcare's Year-to-Date Fund Review and Outlook webinar. In lieu of these challenging times, we believe that it would be essential to provide our clients with regular and timely updates of our fund's focus and positioning. To begin, I'm pleased to welcome Shawn Wee, Assistant Vice President from Investment Partnership and Solutions, to share these updates and insights.
Since the COVID-19 pandemic first started last year, we experienced the fastest 30% sell-off ever earlier on this year in March, even exceeding the pace of declines seen during the Great Depression. In a post-COVID-19 environment, we can see clearly who the winners and losers are based on their performance as at year-to-date and over a period of 1 year. Across the various market sectors, healthcare is among the top 3 performing sectors, delivering a positive return of 14% over the past 1 year. We believe that the healthcare sector will continue to deliver positive returns across the broad market, and as a result of the pandemic's impact, we have seen focused trends shifting in the industry, which will be illustrated next. Despite the current environment of uncertainty, we remain optimistic in the enduring case for healthcare driven by lasting secular trends. Population aging is a global phenomenon. Virtually every country in the world is experiencing growth in the size and proportion of older persons within their population. People are living longer and life expectancy is predicted to rise meaningfully. Between 2019 and 2050, the number of older persons is projected to double to 1.5 billion, and the share of population aged 65 years and above is projected to rise to 16% from 9%. As populations get older, more people are spending more money on healthcare. Based on data from the Office of the Actuary, Centers of Medicare and Medicaid Services, 65% of lifetime healthcare spending occurs in the years after age 65. As many populations grow and age, and wealth broadens globally, the demand for healthcare is expected to continue growing. The low elasticity of demand for healthcare and the growing demand at a time when economic growth is very troubled paves a great opportunity for investing in healthcare. Innovation marches forward. In 2019, there were 48 new novel drug approvals in the US, marking one of the highest levels seen in the last decade. Many of these were for first-in-class drugs, with the potential to drastically impact people's lives. This year through May, another 22 have already been approved in spite of the pandemic. The explosion of innovation in immuno-oncology, gene therapy, rare diseases, medical technologies, and other key areas is helping to offer new solutions to populations with huge and previously unmet needs. We believe our team's edge continues to be understanding what solutions will work scientifically, what advancements entities will be willing to pay for, and the size of the end market opportunity. Importantly, much of this scientific progress is happening at small and mid-cap companies. Large-cap companies with flexible balance sheets were therefore looking to build out their pipelines and made a sizable number of acquisitions of small and mid-cap innovators with valuable intellectual property. We believe this ongoing phenomenon illustrates the evolving dynamics at both the scientific and business levels within the healthcare sector. The COVID-19 pandemic has fueled significant investor uncertainty and market volatility. And while the healthcare sector is by no means totally insulated from these near-term impacts, we believe investment opportunities in the sector remain very compelling. As the COVID-19 crisis underscores, the significance of healthcare globally will only expand. Telemedicine has quietly been on the rise for years, but until recently it wasn't a mainstream form of patient interaction with health professionals, partly due to regulatory limits aimed at ensuring secure, private connections between patients and physicians. With the advent and imperative of social distancing, however, regulations have been adjusted, allowing telehealth to step up as a key medium for safe and efficient health consultation. Video visits are also more efficient, requiring fewer healthcare workers to manage the consultation, freeing them to work on other tasks. COVID-19 has indeed accelerated telemedicine adoption, with certain telehealth companies reporting massive spikes in visit volume. We have been reminded with COVID-19 just how vital healthcare is in our lives. No doubt the virus has led to an increased focus on diagnostics and elevation of the importance of vaccines and the extensive research into antiviral drugs. Globally, there are well over 100 compounds under investigation, and in US alone, there are about 65 in trials. We've indeed seen progress in identifying possible therapies for the treatment of the most acute COVID-19 cases, as well as antibody combinations that could conceivably provide some amount of temporary immunity while we await an approved vaccine. Valuations remain moderate and fundamentals are attractive relative to the sector's history and relative to other sectors in our view. Healthcare is a tale of two cities, the scientific innovators creating breakthrough drugs, and the less innovative traditional players that may experience weak pipelines, patent expiry, and pricing pressure. In such uncertain and volatile market, we believe that the United Global Healthcare Fund can offer investors diversification across the healthcare sector by investing across the different subsectors of the industry such as healthcare services, biotechnology and pharmaceuticals, and medical technology. In particular, we favor biopharma and medical technology firms that develop novel products and service companies whose offerings facilitate the transition to a more value-based, data-driven, and outcomes-oriented healthcare delivery model. The United Global Healthcare Fund has a proven track record since its launch 20 years ago, and it has displayed resilience by way of withstanding events of adversity such as the dot-com bubble, SARS outbreak, the subprime mortgage crisis, the European debt crisis, and outperforming the benchmark at the same time. Since inception, the fund delivered a cumulative return of 533.1% as at end June 2020. Wellington Management has been our partner over the last 20 years in managing this strategy, and the team has demonstrated skilled stock selection and has delivered above benchmark returns over time. Investing in the healthcare sector requires active management in the hands of highly specialized and experienced experts. This team at Wellington is composed of seasoned professionals, including a medical doctor, scientists, and other healthcare system experts, providing global coverage and technical expertise in each discrete healthcare sub-industry with considerable experience investing through economic cycles. The healthcare sector continues to be supported by powerful secular tailwinds, and our fund has been delivering consistent, strong performance since inception. We would recommend clients to remain invested and also to consider the possibility of dollar cost averaging their holdings.
Thank you very much, Shawn. To our clients, we would like to thank you for your continuous support and trusting us with managing your money. We would also like to hear from you. Kindly scan the QR code on the screen to share your feedback. Please look out for our next update on the United Global Healthcare Fund. In the meantime, stay safe, stay healthy, and stay united.